Welcome back everybody into another weekly recap. This was the week from the 15th up until the 19th of August, and this week was no trade week for me. So what we're going to see is mostly the price action and the improvement opportunities that I saw during the week, where and about what I think I improved, and we're going to discuss them. So first one is not necessarily trading in the middle of the session, but in between, which is in between expected volatile times. If we have a look here, of course, this is, for example, NFP or CPI, I don't remember, and trying to avoid entering, taking trades from like, okay, New York Open here can give some opportunities, then wait for 230, then not trading in between then and the new 4 hour, for example. Or if we go on the right hand side, let's see if we have a much clearer opportunity. For example, here, this is New York Open. Okay, New York Open, there's nothing. Not looking for a trade immediately now. It at 820, 819. But okay, wait for some clear price action, and remember that you know that possibly, like for example here with the new 4 hour, then that's when the volume and volatility comes, even the New York Stock Exchange here and the new 10 a.m. candle. So I understand the volume times, the volume spikes, 10 a.m. candle, the new 4 hour, even in a very small, very slow times anyway. And again here, this for example is before that is New York Open and the pre-COMEX Open. But anyway, if you miss this, you wait for 230 and the right reaction at the candle close. This is before the new 4 hour, the pullback before the new 4 hour, the open, which gives you the scalp, and again, pre-New York Stock Exchange, giving you the chance of entering. So what I want to say is waiting for some clear times where it's expected the volume and volatility, and not at a random time hoping for the volatility to catch up. But then anyway, improving the PSAs on the 15 minutes in order to take into consideration the wicks seen since on the 1 minute. That's where it most likely will react. So for example here, let's say I didn't prepare this, to take into consideration not the candle body, over here, because you see it will not give you reaction. Taking into consideration the top wick, because also on the 1 minute, that's where most likely it will give you reaction. Here again, this time was the candle body, but this time around, for example here, the top wick, and that's where the price made the reaction and they bounce from there. So that's the second point. And as you can see, the third one is not necessarily taking the first reaction bounce from a PSA, understanding that it will most likely double top or double bottom. So that's coming from some mistakes that I made in the past, of really looking at the first candle reaction at a relevant PSA instead of, okay, of course this one was not the ideal situation, but instead of waiting for some real confirmation, candle confirmation, retest, for example here, first candle, then a retest, because it can happen that the second retest will go higher at another PPL, before going back down. So entering exactly at the first one, we're going to see it later. It's not necessarily the best option, the best chance for profitable trades, and it's not always that smooth. The thing. Waiting for click and confirmation. Okay, 2 trades a day at very specific and relevant PSAs. That's because of if I'm using the right PSAs, it's not like the price action will may give too many opportunities, because okay, of course this one was not tradable, but okay, I take my entry over here. One, it's not like I'm taking here and taking there, no. One, then I see the demand, I take the second one, and I see the retracement, I take the third one, and that's it. And or maybe I don't see retracement, I'm looking for buys, and I take the double bottom. But with this sort of style, it's more it's easier to prevent over trading because of waiting for the relevant PSAs. And the last one, which is sort of the biggest one of the week, from supply to demand, from demand to 50%, 70%, and scalp. So this is the perfect example. As you can see here, we had our first, this one was a demand area, went all the way back to our supply area, which was around there. And from there went all the way back down to demand. So we have this, the last, we are here, the last push was from supply to demand. So let me delete this. From supply to demand, we see the bounce. We can, okay, we took this full, we take this entry if we want, but what I'm starting to look and what to investigate is the reaction at 50 and 75% of this movement. So the retracement from this top to this bottom, 50% for quick scalps down back to the demand area. Usually you can also see that this is happening at when on the left there's some PSA, so it's not something completely out of the blue or whatever. I'm going to show you now what happened this week so that we can see it together. Okay, so for example, this one was on Monday at this demand area. Price went from demand to supply and then retraced. So this is the move. Of course, you can take the buys at demand, the sell at supply, because those are the relevant PSA. For example, here, what I was talking about before that is, okay, if you take this first entry here at the first tap, you will lose. That will be a loss. But then you wait for clean price action, and that's a win. So that's why I want to avoid taking these entries unnecessarily, especially in the middle. As you can see, 8.26 is in the middle of the session. So after that, what is happening is that, yes, the price action is reacting at this or the block top, but it's also 75% retracement, and you can scalp it all the way back to 25% retracement, which is, yes, the order block on the left. So it's not magic. Most likely it will always show you the price, the market structure will always show you where and why is reacting over there, like here, but can be a further confirmation. This is most likely for the range from 75 to 25%, and not from further reaction, but in this case it will be. And let's go in the next days. And again, this one was a very slow day on Tuesday because on Wednesday we had some news. We had the FOMC and retail sales, as you can see here, from supply till demand, from demand the supply, and 50% more or less, and then all the way back to very choppy, but all the way back to the supply area. Let me see from here to there. From here is a choppy 50% before going back down. So it's not always picture perfect. Let's see. I have something on Wednesday as well. This one was pretty much clear. As you can see, from demand to supply. There you go. 50% of retracement all the way back to the supply area. The opposite is true as well. From supply till demand, and then failure to make its way above 50%. And again, I mean, this first candle, bearish candle, can it be the entry? Most likely, but maybe I have to be aware that, okay, it can be at 50, it can be at 75. So I can take one loss and then I have to re-enter. Or maybe wait for another kind of confirmation and failure to make new highs. It's still under investigation because I want to have nice setups for that and a nice understanding. And this was on the 18th, so it was Thursday. From supply till demand, this is the first time that I actually noticed clearly, as you can see here, from supply all the way back down to the demand area, retracement 75%, which is corresponding to the price action on the left hand side. So I'm saying it's not that is happening wherever just for magic, but okay, it's a further confirmation. Okay, so this candle is at 75%. Okay, so I'm not taking this candle, or I'm not taking a random candle here. Okay, this candle is sitting at 75% of the retracement. That might be further confirmation for entering sells, scalps, at least to the previous demand area or to 25%, depending. It's something that I still have to figure out. Of course, this time will go much lower, but that's a starting point. And this is what happened yesterday. And again, this one was doing, okay, Asian, we are creating the top of the day, so you can see price failing to break. And again here, price is still failing to break. Let me just put the template, which is a little bit clear. You have New York, pre-New York creating a support, New York open and COMEX open failing to break. So you have from supply, from demand to supply, you have a super double top. Not the easiest one, but still this is the beginning of pre-New York Stock Exchange opening. Again, New York Stock Exchange retests the highs of the day, you can see there, and closes bearish, engulfing it. That's your entry. And let's see if like this is a 50%. I haven't checked yet. More or less 50%. So in this case, it was not was not good, because afterwards you only saw that after touching the demand area, again, price created a wedge, lower highs and still lower lows, was not aggressively bouncing like here. But this was the price action of the week, and yeah, interesting. Trying to perfecting my system, and with the use of supply and demand areas, not using anymore the not using pending orders, just really mixing the understanding of price action, understanding of, so let's say, recap, understanding of section, understanding of timing, understanding of setups, understanding supply and demand area. So by section, I mean how is market structure developing. So that should be like an understanding of technicals. Timing, York open, next open, new 4 hour, stock exchange, 10 a.m. And this is 10 mean before and after. The setting of setups, candle setup, plus failure to make new highs, lows, understanding that with the charting up of the proper reaction areas from 50 minutes down